Hope you're having a good weekend. So I'm super happy to bring Gene Inger back to the show. He's a regular guest on the show. He's been in the markets and a market analyst for a very long time. Gene, love to have you back. And what the heck is going on in the market?
Well, the market is definitely a turkey ahead of Thanksgiving. There's an old saying in Wall Street: if you get a turkey for Thanksgiving, you may get a goose for Christmas. And the implication being obviously defensive as you wrap up the end of the year kind of selling pressures now. I think we've seen most of it, not necessarily all of it. And then there's two reasons. You start to get people accumulating who are thinking less about tax losses, which you can take if you don't care to own the stock again up until the end of the year. But also there's that 30-day wash rule, which I'm sure you're familiar with.
Yep.
And that means really this is almost the last week to take your losses if you plan to repurchase the stock in this calendar year. So the bulk of the pressure from that standpoint should be out of the way. Problem is, this is the most bifurcated market with all kinds of influences and factors, including the crypto chaos that I've been talking about for several weeks, so that it's not exactly a traditional backdrop, but we may still get some influences of what you would call classical traditional patterns. Is that fair to say?
Yeah. And Gene, you called the crypto deleveraging in your Inger letter, which I'll put on the screen. So Gene writes market coverage in his Inger letter, and he mentioned this crypto deleveraging event weeks ago. And since then, it has been a disaster. And seeing like how Bitcoin has been selling off very rapidly and seeing how that's affected the equity markets has been surprising to a lot of people, myself included.
Well, I thank you for recognizing that. Everybody's talking about it now. And yeah, I've been talking about it for weeks. I'm not sure I understood what was happening or where it was coming from. I just saw it. As a matter of fact, going back about 2 weeks ago, I mentioned that there was a special emergency meeting between the New York Fed, and the Treasury trading and so on is handled by the New York Fed, not Washington. And it has nothing to do with Williams the other day saying we can cut interest rates unless he thinks we need stimulus because he's worried about the other problems. But the meeting between the New York Fed and the major bankers in New York is what got my attention, because it was unusual, unscheduled, and there was no publicity about it. And I made the comment, I actually just mentioned to you before we went basically on air here. I remember when I was on CNBC live from CES on the floor in Las Vegas, and they cut me off in favor of the New York Times technology reporter, David Pogue, when I started talking about, this was in early 2007, before Bear Stearns, before Lehman Brothers, basically the buildup to the financial calamity. And they cut me off because I was talking about the foolish firms on Wall Street that were going into collateralized mortgage and collateralized debt obligations, and the risk, because at that time, Smith Barney had gotten a letter from the Fed telling them that paper was not qualified as investment grade capital. They had to divest it. And I said, well, this is where if you've got one cockroach, you probably have more. And I did not know what was going to happen, but I was concerned. And I told people, well, everything's very good time to cut back and be careful. Smith Barney is now part, I think, of Morgan Stanley, if I'm not mistaken. And everybody was in it. Merrill Lynch was even in it. Of course, they're now Bank of America. I don't think this is not that, but there was something going on. And I didn't know if it was related to Bitcoin, which was starting to go down, or if it was related to private credit. All the companies doing essentially versions of pipes. And I thought it could be both, but I still don't know what the meeting was about. But and that's why it reminds me of my own experience on TV years ago. And by the way, the reason that CNBC cut me off, I don't think the staff of CNBC On Air knew, but the reason was the producer wrapped it up. Why? Because guess who was heavily in all of that paper? General Electric, through something called GE Financial. And people were buying so-called guaranteed annuities, long-term care, and all that. I can't be specific about GE because I don't know. I just was told that they were in that, and I was supposed to not. They didn't want to talk about it. I made a comment. It's one reason that my appearances became very rare on CNBC, and I think it's because I said something like, well, I guess you can be on the air for 18 hours a day, and when there's something significant, you can manage to say nothing about what's really going on. And I said this to my readers of my Inger letter about 2 or 3 weeks ago. I correlated the memory of that time, 17, 18 years ago. And I was correlating. I wonder why this isn't being discussed, because I thought the cross asset selling, which is what I really spotted that got me concerned, I thought that was indicative of a more significant problem. And nobody was talking about the cross asset selling. Now they are, but they weren't then. And now they are. You could be looking at a trading low, not a high. So the fact, by the way, that we're talking about this now does not mean one should take any action of liquidation or selling. A lot, if not most of that, may very well be behind us, not ahead of us. You don't want to get, it's almost a typical comment of sell when there's euphoria and buy when there's fear in the streets, and something like that. And this may take a while because it's complicated. It's much more complicated than simple nonsense about will they or won't they cut interest rates? Will they or won't they make a peace deal with Russia, who the latest I hear is Russia is already declining Trump's 28-point peace plan proposal with the war with Ukraine. That story is out there today. I have not been able to confirm it, but I've heard that story. You may know the answer to that. I don't know. But I will say on the crypto, it's more extensive than the media has really taught. They say, well, it may have something to do with ETFs. Yeah, it has something to do with ETFs. There's certain ETFs that invest in Bitcoin, invest in what I call unstable coins. And I don't even know if you're a fan of crypto or not.
Yeah. So it's an asset class that I've personally avoided my whole life. And now it's affecting my portfolio, even though I've never bought it.
And that's the cross asset selling that I'm talking about. I don't own it either. I've called several moves oddly correctly. Maybe I should have traded it because I called them right. I called this one right. Yep. And yet I don't trade it. So in theory, I don't care. But like you just said, I care to the extent that it wounds my own portfolio or stocks, even though it has nothing to do with the underlying fundamentals, even technicals of those particular companies. But as they come down in price in sympathy because of generalized liquidations, you get technical levels broken, and then you get technicians bearish, and then people go on chat boards and YouTube, and they start discussing, well, maybe this is wrong, maybe that's wrong. Oh, I loved it 2 weeks ago, now it's garbage, and neither one is correct, but that's human nature, I guess, and they never learn, and they should. Even Buffett has made famous statements about buying when there's fear and selling when when there's fear and selling when there's greed. But the point is on the crypto, certain of these mutual funds, or not mutual funds, ETFs, and some other specialized funds have crypto in there. And you may have crypto through some stock that has all their money in crypto. Reminds me of, I can't think of that tech company, Cooler, for example, which put a lot of their money, a lot of these stocks that invested their own capital into crypto, which I think is stupid for a corporation to do, if for no other reason than no analyst can properly analyze a company if their cash is in crypto and not in a bank account, treasuries, stable. And if you had proper regulation of crypto or any coin, you would have very minimal swings, not dramatic swings, because anything that's a currency, American, British, everybody tries to trade foreign currencies, but the moves are actually minuscule. They're certainly not dramatic like you've seen in Bitcoin. I don't believe that it should be, it's not insured, it's not regulated. I don't believe it should be a currency. But my opinion is not the point. The point is what has happened. And what has happened, they allow leverage on crypto. You probably know that.
Right, like 100x leverage on Bitcoin.
I was going to be nice to say,
how is that allowed also?
Foreigners, mostly Hong Kong and Tokyo, perhaps, and Singapore. A lot of it is Asia, and a lot of it is the cartels. And I don't think Americans don't generally appreciate that much of crypto trading is money laundering and illegal commerce, and it's a way of people moving funds or assets from one place to another. Like you're not supposed to bring more than $10,000 into the U.S. in currency, right? And they're going to catch that at an airport, hopefully Custom and Border Protection. Well, what happens if you transfer it in crypto? You put it in crypto or Bitcoin, and then you come to America and you're Mexican or you're Colombian or you're from Singapore, and then you're in New York and you decide, okay, I want my 20 grand, my 100 grand. Have you just laundered? Have you just effectively bypassed the
and that's
rules?
the deregulated piece of it where that becomes a challenge. I have a question also that I feel like, so I looked at CNN Fear and Greed Index and I've been watching it all week, and I've seen it get down to like 6 or 7. And in the March and April lows, I think we were at 5. What do you think about that?
Nothing. I don't think it matters.
Well, there's wide fear in the market. Is it warranted?
Yeah. Oh, I see. You mean, is it associated with a coming low? Yes, probably. The question is, can you get a little bit more oversold in the McClellan oscillator, stochastic, so on? Yes. Is the S&P corrected? Not very much. But again, look at what's been leading the S&P. It's never been a truly broad advance of the market. Maybe that's next year. We'll see. But I think what's significant about the crypto, I want to wrap that part up, is that people own what they think are equities, and the equities may own crypto and get hurt, or they may own some of these exchanges and get involved with stable coins and so on. And what happens is that brings the whole index down. It impacts the entire index. Then you have that company like Strategy, which used to be called MicroStrategy. That's sailors, I guess. Mm-hmm. They've lost billions, not millions. Well, a lot of these people that invest in that stuff, and I'm not going to say whether I think it's ever going to bounce back or not. If you're an advocate of it, you say yes. If you're not, if you're me, you don't care. You do care only that it stays neutral at least. And I hope it bounces back. And the reason I hope so, it'll take some of the indirect pressure off of the stock market.
Well, they say that Bitcoin is the ultimate risk on asset.
It's ridiculous. And the leverage, if you have 10% down, it's not even 100 times the leverage, 10 times. And the account goes down 20%, you're more than wiped out. And if you do it through a brokerage account where you've got equities, now you've got the stock brokerage coming after you and selling you out of your normal equities to cover your essentially margin call on the crypto junk. I mean, stuff.
Okay. So
you see what I'm saying?
Yeah.
A negative chain reaction having nothing to do with the underlying business of the particular stocks, legit stocks.
And we've had great earnings in these stocks too. Fantastic, amazing earnings from NVIDIA, Google, Amazon, knock it out of the park, tons of money every quarter.
Well, I don't know. I'm not suggesting. I don't know that NVIDIA has any of their money in crypto.
Oh, I'm saying more like the fundamentals of the underlying businesses of the largest companies in the world are doing fine right now. They're doing great.
Except they're very expensive stocks, which are overdue for correction anyway.
Right.
And you would have had some good news selling on the results anyway. And I had written that in my work. So it's not just hindsight, but not necessarily the kind of cascading decline that you got. So less drama.
Yeah. If we look back at 2025 and we had the March and April lows, which was an actual real event. Like we didn't know tariffs, what was going to happen with that. And finally the administration took the the foot off the pedal a little bit and pump the brakes. And then we saw a massive V-shaped recovery in a bull run for 6 months plus. So then we find ourselves more recently in a more leveraged and risk on market. And then just about 4 weeks ago, you saw Michael Burry come out and say, I'm short NVIDIA, I'm short Palantir, AI is a bubble. And it looks like right then the market decided risk off. High beta stocks got smacked right away and have continued. I think for a month probably those highest beta stocks have just been absolutely smashed, and it has seemed like a little bit like maybe the market makers, the fund managers, whatever, had missed that earlier V-shaped rally, and they really wanted to run with any narrative to get these stocks down. It's felt manipulated.
Well, I didn't miss that rally. I thought
neither
Trump
did I.
I think that's where we got acquainted. I incidentally, and I thank you for the shout out coming from the gym the other day. I listened to one of your videos, and you gave me credit for introducing Ondas. I think you did.
Yep. Yeah.
I said, oh, well, thank you very much. So I'm talking to the dashboard of Hilda. Hilda is the name of my Mercedes, which I named after my late German honorary aunt, Hilda. But Hilda aside, I thought Ondas is going to be has potential to be spectacular next year, but that's another story. But as far as the panic, and you mentioning Michael Burry, well, what did he do last week? Do you remember?
Close his fund.
Correct. What's the implication that he did with his short sales?
You tell me.
Well, I don't know, but I'm presuming if he's going to return the money to investors, he's covering the shorts and taking his profit. And he called a good shakeout, and he's done. Ring the cash register and enjoy your holidays. Or even better, go long the market.
What about so that's like this seed, right? The seed narrative, like, oh, the AI is a bubble, AI is a bubble. And then Jensen comes on, and the first thing he says in the earnings call is, well, I heard AI is a bubble, and he tackles it like literally the first words out of his mouth. So you hear it repeated on CNBC every day. You hear it on all of the financial networks, and
he's not a bubble.
Say that again.
Jensen said it's not a bubble.
Right.
Well, it's not a bubble.
So it is or it isn't, right? And then there's concerns about
it can be both, because AI is not a bubble, but the share prices of the stock can be a bubble.
Well, I think the concern also has been the buying all these chips and then the chips losing value and that hurting a balance sheet over time.
Yeah, let me use an example. My AMD, do you know Advanced Micro?
Mm-hmm.
Okay. That was my pick of the year stock. I think it was 2018 when I met the product developer of their newest Ryzen chip. I've mentioned this before to you in Berlin. And I told him if it was $32, I said, if it falls in half, I'll buy it. It fell. I wrote that to my readers. It fell in half, and we bought it at 16, half. And the buy zone was 16 to 17 was our buy zone. And then it went to 175 eventually, which is a 10 bagger. And I said, you know what? You got, I think I even sold a little sooner. You got to sell some of this. But my old saying is sell half and hope you're wrong. Well, that's what we did, except in more like quarter, 25%, 25%. So we sold some in like 125, 175, no, 125, I think it was, and went to 75 to 80. And I said, okay, you can buy that back now, because I think it's going to 200. Well, where's it now? 230, 240, maybe 220. I didn't look. I can, but somewhere in that range. AMD is 204. And
it was up to 270 or 250 or something.
We still have a little bit. So my point is, when AMD was dropping from 125 down to 80, I didn't say there's anything wrong with AMD. I just said the stock's ahead of itself. And that's all NVIDIA did. So that was a AMD bubble. And here you had a NVIDIA bubble. not
So
a
you think
black.
it's a bubble?
No, price, share price. I'm
Share price is
differentiating
a bubble.
share price.
Valuation.
Right. I'm
But
differentiating.
isn't Nvidia only trading in the 20s at forward PE?
Correct. And the same thing was true with AMD. And you could argue, I guess it's not so with Palantir. It's a little wilder.
Yeah,
But
it's a lot wilder.
making a point that stocks get ahead of themselves, they set back, and it doesn't mean a damn thing has gone wrong with the industry they're in or their long-term prospects. It can, but it doesn't necessarily mean that. It does to the slight extent of your focus, which is quantum computing, because the traditional thing I've said for 25 years has been the problem with technology is always the same. And you know what that is, right?
Do you tell me?
Technology. There's always two kids in a garage or a back room or a small firm that are working on something, trying to do better than you, as your nose in the air, who's the leading, no offense to Jensen and NVIDIA, but whoever you are that think you're the best in class, don't get smug and think you're always, keep that heart, like Emerson used to say, when your heart stops beating and you're not striving for greater and mightier accomplishments, you might as well call it a day and give up. Perhaps that's why I'm saying this at my age.
This kind of reminds me. So I don't know if you saw this or not, but our IonQ CEO Nicola Damasi went to Congress on Tuesday this week and said I think we're 5 years ahead of China in quantum computing. And I said, like hell we are. That's BS. But maybe I'm wrong. But speaking of like smug and self-assuredness, like what like I'm an IonQ investor, but I'm also not like, I don't believe that an entire country of 1.5 billion people with a bunch of STEM researchers with government-backed coordinated quantum investment is 5 years behind a single company in the US. I just don't believe that. I can't subscribe to that.
Know that, and they might even be ahead of us in some ways. And not even
they are in quantum networking.
Yeah, it could also still be in their lab, and we just don't even know about it.
There's a theory that if something comes up in the Western media, then China will release that. Oh yeah, we have something like that. But if it's not in the Western media, then why would I actually talked to the CEO of a company called Seek yesterday, and he works with NVIDIA, and they're making chips like horizontally through the quantum industry. And he said, what if the US has enjoyed the tech dominance for decades, like they have, why would, if the next frontier of technology is quantum and quantum computing, quantum sensing, what motivation would a country like China have to be transparent about where they are with the technology?
Well, they would not.
They would have no motivation, right? Isn't it in their best interest that the US is disorganized and fractured as far as the efforts that come to this?
Which is why Trump is correct when he says in the last 2 days that even though some of his party disagrees, that we do need to bring many people from Asia, he means mostly Taiwan and South Korea, I think, to help build and set up the facilities in Arizona and so on to make the newer chips. Because we've let those skills slip away.
The manufacturing.
Yeah. And so he's talking about H-1B visas for educated people, and people don't understand this. He's not against immigrants. He's opposed to illegal immigrants. And even then, you have to wonder if how that's being handled. I don't want to touch on that particularly, other than obviously, if you're going to have the high-end skills, you've got to bring people here. We don't have enough of that. We have some people here that obviously Google has some. They have all these companies are working on chips. And speaking of quantum, is quantum the two guys in the garage with the next technology? I think it is, and I think that Jensen knows that, which is why 3 days after he trashed quantum and temporarily hurt your stocks and my stocks. 3 days later, he changed his tune. And then he even had that meeting, remember, where he invited everyone to show up.
Interestingly, he did not mention quantum at all in this last earnings call.
He did not. And the next meeting that they're having, where there will be some quantum players, he specifically did not invite, I noticed, D-Wave.
D-Wave is the most hated, right? For some reason.
Whole discussion. And you can look at the technical pattern on the chart of D-Wave, and you can see what looks like but they all have similar patterns, like a head and shoulders top patterns, and then you could have ABC decline, and you could argue there's one more wave down. There could be, but also people are playing for that, and they've been playing for that, which also means there's heavy short positions out there. Maybe those get run in. So I wouldn't be surprised if D-Wave is hovering, around $20. I wouldn't be surprised if, I don't care if it goes to 18, but I also wouldn't be surprised if it went to 28 or 25. It would not surprise me. And it could do that, and I mean this year. When people say, well, like one firm put a target of 13 on this, for example. But when? Is that this year or next year? If you're talking this year, yeah, I could see 12, 13. If you're talking next year, maybe it's 23. I think it's cute when analysts put targets, but they don't give a time frame or even show it on a chart. If it does this and this and this, it goes here. Like you said to me once on one of our discussions that NVIDIA might be $500 a share, or was that Palantir? I'm not sure which one, in your lifetime.
Either,
And my response was, I hope it is, but I doubt it will be in my lifetime. Slight difference in age, which also means that I'm more tempted when I have significant gains, especially in blow-offs such as we saw. I take something off the table. And I think you were surprised I sold it too soon when I sold IO&Q. I don't know if you were surprised or not when I sold Rigetti.
I actually am more curious. So more recently with all the quantum stocks making their all-time highs, but in the last 2 months, right, we had IonQ at 85, Rigetti at 58, and D-Wave was around 50, and now they've been cut in half again.
Half.
And what's interesting though is a lot of high beta growth stocks have also been cut in half. And what I'm having a hard time doing is I'm having a hard time because I know like BigBear.ai had a better quarter. I know Ondas actually had a nice surprise. They had a good quarter. And what I'm having a hard time doing when I look at a growth portfolio is understanding sector specific sentiment, right? Like, oh, the quantum sentiment is very sour, but really like the whole growth and beta sentiment is also sour. So it's hard for me to like decouple. It was a little bit easier when we were in more of a bullish market to see like kind of what the true sentiment was on these names.
Well, one of the problems with, say, Ondas, and a problem is an odd problem. It has probably suddenly become one of the most followed. So we say that I don't mean to impugn average people in the market with inadequacy, but it became a big retail favorite. So did BigBear. And so what happens is the people that don't want to buy when it's down and they do want to chase FOMO, fear of missing out, that crowd got in those stocks at higher levels. That may be part of your tax loss selling that's going on this time of year. And they may be selling now because they're in panic and they don't understand the process it's selling and what really pushed this market down. And they may, it would have gone down anyway, but I should say exaggerated and amplified the decline. And so some of that pressure should be diminishing. I can't say it's completely gone, but it should be diminished or diminishing. And as far as those two stocks, I think they're both have extraordinary potential. And I'm not, for instance, the average retail, quote unquote, investor might say, oh my God, they're voting to double the number of authorized shares. That means dilution. Well, if that's exactly what it means, then how come institutional buying has simultaneously increased? left hand, right hand. And that's why I use an expression. Some people don't like it. And that's true. Assuming we're not in a disaster and it's not 1929, Ross Sorkin just had to put his book out during all this. And we're not, you and I may have our portfolios like anyone else, somewhat wounded by this little hit the market has taken. And yet I don't think that this is going to be an anti-Maine era. And I don't think we're heading into the Great Depression. Rather, I think you're going to see the spigots of liquidity unleashed for 2026. The big, beautiful bill comes into play, all kinds of spending, lower interest rates, and you have the smartest adult in the room being our Treasury Secretary, Scott Bessent. So I think you're going, not to mention, you have all of the ramifications of TSA, FAA, Department of War, which I prefer to say defense, and Custom and Border Protection. All these programs have been delayed a few weeks. Otherwise, we would have seen, I think, more awards, and maybe our companies would be the beneficiaries of at least some of that, if not the bulk, but some of it. They don't need the bulk. Yeah, and you're going to have political pressure because they donate money from the big traditional military industrial complex company, Northrop, Boeing, Lockheed, so on, and even Anduril. They're all connected, and they all want to get a piece of the action of what's coming, especially in drones, and they are going to get a piece. But so are these smaller companies. And Army Secretary Driscoll has made it clear that a lot of the money, like $1 billion or $2 billion, is going to be pointed towards small and defensive drones. And people think aggressive. Well, most of what Ondas does is defensive, counter drone, rather than drone. Although they bought part of Rift and they have the exclusive sales in the United States, they make a product called the Wasp, which can be in a backpack of a soldier, and that's an attack drone. So we can go into that whole company if you want. By the way, if you want me to give you a little bit on Ondas, there's some progress being made by Siemens to get the Amtrak contract for the new wireless networks on rail in this country. And guess whose equipment Siemens is using?
Ondas.
Exactly. That's their U.S. partner. And that's rather important. And Siemens is well known and well respected by NATO and by our government. And so I would not be surprised they get it. I don't know that that's a game changer, as some people think, but I think it's really overlooked as everyone thinks about only drones. But they're also in fiber. They're also in land-based robotics. And I think they have one of the better attuned CEOs for this purpose, Eric Brock. You know Eric. I think you've chatted with him.
I have invited him onto the show, so hopefully one day he'll come on and talk to us about the company.
But Eric's background is mergers and acquisitions. Eric was like one of the high guys at Bear Stearns before everything fell apart 15, 17 years ago in mergers and acquisitions. And then he ran a hedge fund in Boston. And he's putting together what amounts to a vertically and horizontally integrated robotics, autonomous drone, etc., a defense firm. He's not just wanting to be a drone maker. Look where they invested. I guess somehow I've evolved into talking about Ondas, which is my pick of the year for 2026 for the Inger letter. And we announced that at half this price, by the way. And anyway,
true. You did. You brought it on here on this YouTube channel when it was $2.
Oh, okay.
Yeah.
My lowest cost is 78 cents a share.
Wow.
And then I doubled up at $1.25 and bought more in the twos. And all of it was exactly disclosed to my readers right away. I don't front run.
That's amazing. Gene, I know you said you have an appointment after this, so we have exactly 10 minutes left. I do have an interesting question for you. So now that everything is washed out, right? We've seen lots and lots of high beta stocks sell like crazy. From your perspective, do you see any good deals out there? Do you see any like screaming Black Friday deals, like, or do you feel like things are fair price right now?
Well, I think you're referring to Black Friday as in holiday special.
Black Friday is, so that's an interesting thing. Like, so if that TV is half off, then you run in and you just can't wait to buy it, and it's a depreciating asset. But when a stock is on sale and it's 50% off, then it's the worst thing in the world, even though it could be an appreciating asset. So
what you might have in the next few days is a Cyber Monday kind of scenario. Black Friday might be behind us because yesterday, this was recorded on Saturday, the 27th, by the way, of November.
22nd, yeah.
22nd, excuse me. I'm already stuffing cranberry.
Yeah, exactly. Gene wants some turkey.
Yesterday
the market wasn't enough.
Yesterday, and that's on a Friday. Tuesday turnarounds are well known. Yesterday was a Friday turnaround, and then they stuffed it to the bears and took the market up, although it faded a little bit at day's end. I think there's just with some screaming buys yesterday morning, it couldn't be resisted. It's even more interesting because yesterday was a November monthly expiration. It's not a quarterly expiration, but a monthly, still significant. And they're often very neutral because people are worked out of those positions beforehand. Not in this case. And you manage to get that turn. I think in theory, you should have, it depends on the news, obviously. This is such a market sensitive to existential factors. Bitcoin is existential. What happens with Russia and Ukraine is existential. There's a little bit of that out there.
Do you think
you wanted me to answer?
Yeah, go ahead.
Black Friday bargains.
Yeah,
there are. Okay, and I'm going to mention Ondas. I was going to add this on. They look where they've invested. And again, if you assume Eric is a good M&A guy, hi Eric, in case you're watching, but he put $4 million in LightPath. He put $4 million, who also just did a shelf registration after the close yesterday. He put $4 million in Unusual Machines, which just leased an additional 20,000 square feet, not far from me, on top of the 17,000 square feet that they had leased as their expansion only a couple months earlier. So now that's a total of approximately 37,000 square feet more than their original facility. Well, what are they doing in that space? I would guess it's more than high-speed electric wound motors for the drones. Maybe they're going to make the drones. And so Ondas put $4 million in Unusual Machines, which happens to have Trump's son on the board. Not that gives them a leg up to getting a contract, but doesn't necessarily hurt. And then you've got other stocks that they invested in, like Copen, which makes FPV, first-person view controls for drones. And they also make gaming goggles, the mini LED displays, and they got an Army contract. And nobody hardly knows that stock. Well, Ondas invested in all three, Unlimited Machines, Copens, and LightPath. Do I think they'll all go up? Maybe all three will go up. Maybe none will go up. Maybe they'll get acquired. I don't know, but there's some sort of relationship. And this is where I got asked, because I've mentioned all these stocks before the investments were made, that I put these guys together. No, if they're reading my work or something, or I don't mean no hubris on my part, but okay, but it's unknown to me. From my standpoint, it's coincidental, but it's welcome because they see value in what each other is doing. And of course, LightPath is hoping that Lockheed gets a key missile contract that Raytheon is the traditional supplier of, so they can move into that space. So, we'll see. And I wouldn't be surprised if it drops first because of having an offering. But as far as Ondas, they're acquiring. Look who they've acquired. They acquired what's it called? Centrix, and Big Bear acquired what's it called? Yes,
something with an S.
Sage.
Sage, yeah.
yes, SAGE, which is military and federal voice generative AI. So both of those are accretive. I mean, they're going to be contributing favorably to cash flow. You, of course, understand that. But anybody who's viewing this who thinks, well, it's dilution. If you have dilution, which adds a proportional increase, not simply maybe they'll do something, but already revenue producing business, and you're acquiring that, and they're going to do the 125 million for this year still. That's growth. That's growing a company. Palantir did that in the early days. I think NVIDIA's even had a couple acquisitions. Who hasn't?
Yeah.
And Big Bear bought Pangiam, but both were industrial companies. And if you want to talk about an undervalued stock, I don't know. I don't think too much of maybe of the CE. Well, I shouldn't say that. What about Red Cat?
Yeah.
Do you follow that one?
Yeah, I have Red Cat in my portfolio.
So is that tax selling?
The stock has been between $15 and $7 in the last like 3 months. So it's just like one that moves like crazy, and it's very sensitive to sentiment.
I thought it was
Huh?
I thought it was $6 a share.
Yeah, it probably is. I haven't looked for every stock in my portfolio has taken a
Well, let's
big haircut.
assume that it's $6 a share.
Mhm.
As we get through tax selling, is that a buy?
Mm-hmm. Yeah.
You think so?
I don't know. I don't have strong feelings on it. Actually, I did want to. I pointed this out, but I've been very interested in photonics lately, and that after I had a CEO from of the company called Orca Computing, when I heard about photonics. And then Xanadu, this company in Canada, which D-Wave is also from Canada, Xanadu is accessing U.S. equity markets through a SPAC merger under the ticker symbol CHAC. And then I saw an interesting headline coming out of China. China was claiming that they had this chip that they created with a photonic, not a quantum computer, but a photonic quantum property that gave 1000x speedups on certain AI problems. So then I started looking deeper, and I saw that that company was using something called thin film lithium niobate. And lo and behold, company in the US that is working on that is, can you guess which one?
No.
QUBT, Quantum Computing Inc.
Yeah.
They've fallen. I mean, I don't know if they've ever been in favor when I've talked about them, but I've focused a lot on their communication and not as much on their technology. So I decided, okay, I'm just going to give this a shot. So I picked up more shares of QUBT in a company called Poet, which also works on the sort of light-based sort of infrastructure in data centers.
Photonics. I've heard of it.
Yeah.
I have this much left of QUBT, maybe 5 to 10% of my original holdings.
It's $10 now or less. Like they've taken it down from 25 to 10.
I had to schnitzel some gains because I paid $1.
Yeah.
I mean,
fair enough.
Something like, I don't remember. And I sold it near the highs. Now and I retained not all. I've sold, I sold half my warrants on D-Wave at 41 and at 34 on QBTS. And the rest of it, the other half, I tendered to the company. So now I have the shares because the warrants are no more. You know what the deal was? For every warrant, I gave them one warrant and $11.50, and I got 1.45 shares.
Very
so
nice.
It's better than parity a little bit.
Well,
and I think that I think it's probably worth mentioning this because nobody talks about this. In the last few days that the warrants were still trading, because they went off the board earlier this week, in the last few days they were trading, they actually went below what the common was selling for, where typically the warrants had sold for $2 to $4 above what the common. I think some of the pressure, I realize that whole section went down, But I think some of the pressure on D-Wave was from
The warrant
the
exercise. Yeah.
warrant exercise and liquidation. And that's now behind. So the decks are cleared from that perspective. But if people weren't selling the warrants, why would the price have eroded? It doesn't erode if you tender it. That means there's a lot of people that were speculating in D-Wave and they weren't willing to pony up the $11.50 to better their position in the common, which is not better at the moment because it went down like everything else. But now, I'll put it simple. If you had 1,000 shares of, if you had 1,500 shares, 1,500 warrants, you now have 2,100 shares and a little more of the common. The closing thoughts are to understand that some of this volatility is reflecting on the emotions of the nature of the traders that are in these stocks. I would be more concerned if I saw the Vanguards, the Goldman Sachs's, the BlackRocks, if I saw them selling concurrently positions in Big Bear, in Ondas. Instead, I see them buying.
Right.
I see them increasing positions.
They scare you out of your shares and then buy them, right? Till as old as time.
Perhaps. And you can say, well, they only have the right options on them. Not at this point. As a matter of fact, it's on my mind right now. I'm maybe with D-Wave because there's people that think it's nothing. You know what I might do? I might take my D-Wave and I might write some puts. And if by any chance the shares drop some more and they assign them, I'll be happy to own the stock at a lower price. I'm just giving an example.
Yeah.
But I'm pretty sure some of this merchandise, which is what these shares are, will increase going into next year. Now, of all the quantum stocks, my view all along was that D-Wave was the one that had actual business. I know there's been some inside selling, but elsewhere it also. And but some of these guys have worked 10, 20 years to achieve something. I can understand where they take something off the table. I'm not thrilled when they take too much off the table.
I mean, I think Alan still has like 80% of his shares remaining,
really?
Or something like that. I'd have to double check that. But
what I would like to ask you before we go, because that stock is something we both followed for a long time, and I'm in there from $2, and now I have thousands more shares than I had before. What do you think their business prospects are?
So my current perspective on D-Wave is they have the intellectual property. They have the patent portfolio for annealing, and annealing is still in the early days and they're still scaling up the machine. So we don't know, we know what a 5,000 qubit D-Wave Advantage 2 machine can do. We don't know what 100,000 qubit or 1 million qubit Advantage 3 and Advantage 4 machine will be able to do. And actually, I always go back to this remark that Alan made in an interview, and he said that there was a time where they thought that gate-based machines would be able to do everything, including annealing. But now there's more of a thinking that annealing are going to be better at optimization problems always, no matter how good a gate model computer gets. And so the more I talk about it, and I had a really interesting conversation with this quantum CEO last night who's building chips for all these quantum companies. I think the computer center, the data center of the future is just going to have multiple modalities, and they're going to be good at different things. And annealing may be one of those modalities, and photonics may be, but it's hard to say. I think it's too soon to call a winner.
So when Jensen talks about hybrid of his like Blackwell and quantum, is that a real prospect, or is that him not wanting to acknowledge that the next generation, meaning the guys in the garage again, to go full circle here, is the quantum crowd?
I think the NVQ link, the architecture they're designing is so that no matter what quantum is successful, they will be able to use Blackwell chips in NVIDIA's architecture. So I think that's their bet, is to bring quantum into their ecosystem early and be an architectural player early on. So I think that that NVIDIA has absolutely done a 180 this year. They've done everything short of start building their own quantum computing. But I also think in this industry, as this industry accelerates, because we see like IBM, IonQ, Quantinuum, all with fault tolerant roadmaps as soon as 2029. And that's going to be really like a massive inflection point in this industry. And it's almost 2026. So we're talking 3 calendar years before we're seeing these machines that are really, really starting to blow people away. Hopefully, you know, even if it's only a specific slice or subset of problems, I think we're gonna, within this decade, I think we're gonna see a lot of momentum in this sector.
So you envision getting through this, call it a rough patch or whatever you want to call it, in Bitcoin influencing everything, all of this deleveraging. Do you envision the first quarter of the new year being favorable for quantum as a sector?
Let me put it this way. When all these quantum stocks reach their all-time highs, I did not sell a single share. And I have not sold a single share on the way down. I've only bought more quantum. To me, this is a 2 to 3 year easy hold. Tune out the noise and just wait to see. And I've also diversified my bets between, I'm going to be talking to Matt Kinsella of Inflection on Monday on the show. I have a bunch of Inflection stock, right, with their pre-SPAC merger, their SPAC merger that's happening. I have Xanadu, I have Rigetti, I have IonQ, I have D-Wave. I'm spreading my bets and have mostly a horizontal portfolio, so it's a bet on this sector.
You took the words out of my mouth. That was me early this year when I had all of the Rigetti, Ion, and all of them, but all along I said D-Wave was my primary holding. I sold the others, mostly all, very little left, if any, and I still have the majority, but not all, of my D-Wave. But again, my short-term, again, I hate to mention my age, but the short-term versus long-term perspectives are going to be different at your age than they are in my case, to be candid. At the same time, if you ask me, as loaded as I was in quantum a year ago, which is really the claim to fame maybe for both of us for this year, I am loaded with Ondas and what's the name? Big Bear?
Big Bear.
Big Bear and Dragonfly and sprinklings of the others that I mentioned today. And then there's ones that I have no clue if they're going to get contracts or what they're going to do, like an airship.
Yep, I've still got airships, still got a lot of Veritone. I think that's the beauty of just buying a lot of shares and just waiting.
I'm glad you mentioned it, because that's a stock like Redwire would be another one, both of which were considerably higher early this year. And there's a lot of, I hate the term bag holders, but there's a lot of people that paid up before we ever heard of them. And well, I didn't hear them. I knew Redwire because the CEO is the same. Peter Canito is also the chairman of the board over at BigBear.ai. So then both companies are the two public entities. Firefly is another of AE Industrial Partners, which is aeronautics and space partnership, originally helped funded by Boeing. But be that as it may, I think that's going to be a very exciting sector. I'm not sure exactly. This is my age now. I'm not sure what I was talking about. But
when I said Veritone, you said I'm glad you mentioned it.
Veritone.
Yeah.
Veritone and Redwire are, I think, tax loss suppressed stocks. I did not own either one at higher prices. I bought a little Veritone, not a lot of Veritone, at $1.35, and I think you got in shortly thereafter.
Yep.
Buy zone 135 to 45. It went up to what, 7 or 8?
It actually went up to $9 before dilution, but they were able to eliminate quite a bit of debt, and they also have some interesting partnerships with these hyperscalers or data centers. I mean, I have so many stocks, it's hard to follow every single news item.
As the CEO is very promotional sometimes in his discussion, but that doesn't mean they're not doing the job. And they have several hundred employees. They're not teeny tiny. If
Right.
he achieves what they're talking about, why is that not a double or a triple in the next 6 months?
Yeah, and they've been in the experience they have in AI and data refinement, and they like experience is good, I think, in this sector in AI, because
Yeah.
what are you doing with all this data? Like all the police and body cam footage, like are you going to have a human sit there and watch murders happen day after day after day and just traumatize one employee after the next, or can we actually use AI? And that's what they're doing.
Bottom line, I think that's a stock that can have relief rally up after we get back selling. Redwire, they have a contract for low Earth orbiting satellites. U.S. government doesn't give contracts to companies that they don't think know what they're doing. At least they try not to.
Yeah.
And guess what company they are apparently using to manage the low Earth orbit satellite constellation? BigBear.ai. And nobody talks about Big Bear as relates to space satellite management. But that's just another field. They don't talk about them with healthcare. They just presented at a large healthcare conference. I think both companies, and do we need to remind, if there's any new viewers, that the lady who is the acting director of the TSA, her name is Ha McNeil, and she was formerly vice president of Big Bear. And before Big Bear, she came with Kevin McAleenan, the CEO, from Pangiam, and she was the co-designer of the basically the digital ID, essentially processing system when they acquired VeriSign. I don't know if that's where she came from, but they bought VeriSign. Pangiam was sold to Big Bear. That was also an AE industrial company. And you have this amalgamation. Does that give Big Bear a heads up when it comes to the TSA and FAA awards?
I mean, I've been in Big Bear long enough that I already appreciate what they've accomplished, and I'm excited to see what they will accomplish in the future as well.
It's a 3-point something on volatility. I mean, it is. Yep. There's a whole, I think, college industry of people that are swing trading that particular stock.
Yeah.
And I think in the case of Ondas, there's simply a whole crowd that wants to buy it and hope. And what's going to happen with them is they're going to miss the upside if they don't accumulate in these last few weeks of the year. It's probably the case with Big Bear as well. Can we guarantee anything? No. I'd like to point out, since I just made that comment, that nothing is assured, and you do anything on your own recognizance, your own risk. This is to the audience, not to you. and past performance is no guarantee of future results, but I do wish you a great holiday. And if you do have a turkey for Thanksgiving, I do hope you get a Christmas goose and other than lumps of coal in your Christmas stocking, unless, of course, you own a coal stock.
Awesome. I think that's a beautiful spot to leave it. Gene, if people want to find you, where should they go?
Ingerletter.com. And please, I'm going to take it away. I don't even want the 1-week trial subscriptions. There's a sample on there if they want to look at that. And if they want something for free, they can just look at my post on X. You see that on the bottom of the screen. I'm at Stocks here on X, the old Twitter. And this is more a labor of passion, I guess you call it, for the market at this point. I'm trying to work less, not more. I don't care if people subscribe. If they want to subscribe, fine. If they want the daily briefing, then they can pay for it. And I've already deleted the market cast. I used to charge for my intraday comments. No more. I just do it for free on X, and that's it. But they can visit my website, and I have paid my vendors, which is my website hosting and distribution of daily briefing, for 2026. I can't guarantee how long I'll stay around, but we only bill by the quarter, so nobody has to commit for a whole year anyway.
Yeah, and I will add to this, Gene, that I get your Inger letter, and I told people I make a better bull than a bear. So I get a little quiet on the channel. I don't post as much when the market is a hot dumpster fire like it's been. But you post or you send that letter every day, and you're trying, no matter how crappy the sentiment is or how bad the market's doing, you're doing the hard work to try to figure out what's going on. And so I appreciate that consistency as well. You just don't get that consistency even from me, to be perfectly honest. So,
well, I appreciate that. And all I can say is not only do I not necessarily mind touching the topics, but in the 2 days of the washouts, like Friday morning, what was the other day? Was it Tuesday morning? When the market was hit the most. In both cases, it came, not dramatic. But what did I do? I either forward rolled options or I bought calls that expire at some point next year in favored stocks that maybe dipped into the fives. And since we have 2 or 3 stocks that are trading in that price range, you can take your choice. And maybe it was more than one ticker. And it was.
Well, Gene, pleasure to have you, and we'll see you soon.
Cheers. Thank you. Happy holidays.
If you'd like to support the YouTube channel and the website, I do offer memberships starting at $4.99 a month. Your support really helps. If you head over and check out the membership levels, there's Quantum Bull at $4.99 a month, the Golden Bull at $14.99 a month, and the Diamond Bull at $49.99 a month. And if you check out our Discord, it is really fun. We talk about a lot of different things, and we have specific channels for specific stocks. You get an alert in our video drops channel for every members video and non-members video. I highly recommend joining if you want to, and if you're able. We'll see you in the next one.